strategies for reducing risk amidst Bitcoin and altcoin volatility. Hey guys, it's Keith Allen. This one's going to be slightly different. We're going to be using, and bear with me, like put all my mix together. There you go. In addition to the normal analysis today, we're going to do something a little bit different. I'm going to add a little bit of a educational component into this because, well, it's timely and it's what's working for me. I'm going to show you not just what's working for me, but I'm also going to show you, I don't want you to think that, don't think for a minute that I get it right all the time. I'm going to also show you what hasn't been working for me, some tried and true methods that I've used for years and years and years that are not performing so well in this environment. So we're going to look at the charts. Of course, we're going to look at fire charts, order book liquidity, and order flow especially. And I'm going to show you an indicator that I've been using that has really been helping me dollar cost average my way into longs here. So before we start, just a bit of housekeeping. If you're new to the stream, and especially if you're old to the stream, do me a favor and smash those buttons, hit the like, hit the share, and help me grow this thing for sure. And if you haven't done so yet, make sure you hit the subscribe button. We have been having some amazing discussions in our Material Indicators Telegram channel. If you have not joined that yet, I really, really encourage you to do so. The alpha flowing through the channel is just incredible. No moon boys, no shillers, no bullshit in there. It is really a great environment to share insights, to gain insights, to learn. And I think it can help you. Well, not I think, I know it can help you navigate through this kind of volatility and FUD, because we're all going through it together. So if you haven't joined yet, you will find the link not only in the description of this YouTube video, but also you'll find it on the profile page of the Material Indicators X channel. So you got that going for you. And with that, I guess we should go ahead and climb right in. I'm going to start with a view of fire charts because we've had some interesting developments here today, and some liquidity on the move that has obviously got price rebounding here after we swept the lows, at least the local lows, again this morning. So let's go here, and I can show you how price is being supported. We see bids had started stair-stepping up. We now have a I won't call it a buy wall because I don't think they have any intention of getting filled. This is what I call liquidity herding. They are trying to push liquidity up, push price up into these asks, potentially to get filled here. These asks, as you can see, have been stair-stepping down to potentially get price, pushed back down. We'll see if they pull the roof on this one or if they actually want to get filled as well. That's 23 million sitting there. And maybe not so coincidentally, 23 million sitting here. See what I'm saying? This could be the same entity playing this game where they are pushing, trying to push price up into their asks here. And I guess that's all fair game these days. You can see, the buying came in pretty robustly here a few hours ago, and that's how it got here. Now, where the trepidation was for a lot of traders was earlier today, when price was hovering around this 200-day moving average, which, historically has been a great spot for entries, as has the trend line. It got overshot here by quite a bit. So depending on how you trade, if you're running stop losses and you're running tight stop losses because you've been hammered here this week, then you may have potentially been flushed out of that. I will also tell you that a strategy that I've used historically, I have used dollar cost averaging. I use it manually, and I also use it automated is what I meant to say. By the way, live chat is open if anybody wants to join. I always enjoy engaging with you guys. So live chat is also open on YouTube if you want to chime in or if you have questions. So I have, believe it or not, since way back when in the FTX crash back in November of 2022, I've been dollar cost averaging my long-term position on Bitcoin um, since then. I'm not going to pretend to say that I hold a bunch from this level. I wish I held more. I sold a lot of it on the way up because I thought we were going to go back down and potentially, at the time, thought we were going to go test here, which didn't happen. And so, but over those, past 2 years plus, I have picked up some more Bitcoin here. I picked some up here. I picked some up here. I picked some up here, and all along the way. And so my average price, my average entry now on my hodl position is still a sub 50K level, which is sweet. Would I rather be down here or here? Absolutely. Do I wish I picked up more at 25K? Yes, this is regrettable. Do I wish I picked up more at 50K? Yes, I do. But it is what it is. Either way, I'm still in a pretty good spot, right? Because my average entry is sub 50K. But like I said, finding these levels can be challenging, especially if you're not great at technical analysis, or if you have the technicals being overshot like they have been as of recent. Now, I do love that we hit the trend line here, or came very close to it recently. And I do love that we engaged with the 200-day moving average. Those are great, solid places, typically, or historically, I would say, to pick things up when we are in a bullish scenario. Now you can see here where the moving averages were all crossed up, and we went below the 200, and that was really losing the trend altogether here, right? And so a reclamation of that, the trend line held it for us, and as it did here. So this is still, in my opinion, a bullish setup, because we are holding the trend line. Now, in terms of where we could go from here, do I think that the bottom is in? I'd like it to be, but you just can't call it with certainty because of this environment that we're in, where well, let's just call it what it is. The first family is manipulating the market, right? And we know there's wind of another crypto-friendly announcement that may or may not actually, come into, make it to fruition. But we know they're going to continue to bait the crypto market and those constituents in with hopium. And, that kind of backfired over the weekend when the Donald made an announcement, price pumped huge. And then Monday, literally full retrace, and then some, right? And so what we want to do is dollar cost average. By dollar cost averaging our way in, we don't have to be perfect on those entries, right? I've been stopped out a few times here in the past week or so, and that's always frustrating. I have been front run. Oh man, was I front run right down here. We had that CME gap down here that didn't quite get filled, but I took entries here and here along the way. And so guess what? It was good enough for me. Did I get filled as much as I wanted to? No. But did I take some decent entries there? Absolutely, I did. And one of the tools that I'm using to do that is the MTF mean reversion indicator. And this is a powerhouse, man, straight up. I've used this since, well, before we even launched the company, we were using MTF. It's one of the things we actually founded the company on. We tested this. We gave it away for free for like almost 2 years, and just tested with a small group of guys and girls, but with a small group of traders, probably, I don't know, I want to say like 40, 50 traders. And, we're talking back in 2018-ish, and we're doing very, very, very well with it. And so what we have here is, for those who aren't familiar with mean reversion is very, very simple, right? Very simple principle. The center line here is mean. Okay, this is a 0.5 fib. This is a fib-based indicator, and it runs actually on 1 minute time frames. So what we see here is that every time price deviates from mean, it tends to spring back to mean. And that works both above and below mean. Okay. So here you can see the amount of times we've deviated below mean. And this particular setup is a 4% deviation, which is actually pretty robust for Bitcoin lately. Over the past year, we've had very, very few signals. By the past year, I mean like the past 365 days. We've had very, very few signals at this level. When we're in a chop, I run a more conservative setup. In fact, what I really run is a grid of setups, because you never know, yes, when we're chopping, we're chopping, but we're chopping until we're not chopping. And then we get this, this flush. So I run a grid of different setups, and then I just turn off the ones that I don't want to use when the volatility picks up. I always leave the upper ones on because it doesn't matter, right? If they're not getting hit, it doesn't matter. But so to show you what that looks like, in a 1% deviation, you see there's a lot more signals coming, right? And this may serve you well for scalping strategy, but you can see here that this is the volatility has gone way beyond this 1%. And so that's not a great deviation for this kind of environment. 2%, better than 1, but still you can see it's getting overshot many, many times because we're in a volatile market right now. So that's why I have stepped up to the higher deviations. Dev 3, Dev 4, Dev 5 has, I don't think I've had a Dev 5 yet. So to keep it simple, so I'm not confusing you with all these different ones, we'll go to the one that's been performing the best, and that is in the current environment, a deviation 4. And as I said, when price deviates, it likes to snap back to mean, which you can see it does repeatedly. And that happens both below mean as well as when price moves above mean. You can see this. It took a while, and these are 1-minute candles, by the way. So what looks like a long time really isn't that long of a time. And these obviously went profitable. Now, I dollar cost average these because I'm taking, rather than going all in on one order, that's how you get wrecked. Rather than go all in on one order, I take small orders, incremental orders, and I add them together, and I dollar cost average. So let's just say that my average entry on these, with these two signals here and this cluster of signals here, is maybe closer to somewhere around here. So where I got this 10% profit marker, maybe I was a little bit lower. 20%. Nonetheless, these were great entries. And to be honest, these 4%ers, I haven't sold those. The scalps that I had at higher entries, yep, we sell those. But these deeper deviations, this is my buy the dip strategy. Okay, so this goes into the HODL stack, and you can see we came right back and started doing it again. And guess what? If I wanted to scalp these, I'd be in a pretty good spot. We'll just eyeball this and say we're somewhere around here in a price, and that's a 6%. That's a 6% scalp since what's that, last night? So in a nutshell, that's mean reversion, and this is the MTF mean reversion indicator. If you are interested in learning more, there are some tutorials on the Material Indicators YouTube channel. I've got a link in the description for that. And of course, there's more on the Material Indicators website as well. Game Zone has a question. What do you think about the tariff wars? Trump just announced that a 25% tariff will take effect tomorrow. Do you think prices will drop, or will the market be neglected? What do you think, Game Zone? I think that the market is getting beat up by some of this stuff, and I think that it is, if this tariff suddenly goes away and it goes, oh, we're going to kick it down the road to April, which has been floated, or it's not going to be 25%, it's going to be 17%. whatever it is, if he keeps, um, kind of playing this game of smoke and mirrors, the market's going to eventually get desensitized to it. And so I don't think it's a good thing. I think that if it does go in place, and I haven't watched all of the news, but I've seen plenty of headlines where, especially the Canadians are retaliating with their own tariffs. So that's not going to be great for the economy. But I think Trump's goal here is to make things bad before they get better. I think his goal here is to make things look bad as kind of a hangover, if you will, from the prior administration, and then to make them look good because he's going to force the Fed eventually to start cutting rates. And so by making things tougher on the economy, by spiking unemployment and spiking inflation, he's going to get, he's going to get the rate cuts he wants. How soon they come, don't know. We'll see about that. There's a Fed FOMC meeting later this month. I'm not sure we'll get it as soon as this month. In fact, I don't think that's expected. However, I don't know when the next ones are after that, maybe June or July. Maybe there's a May or June. We could conceivably see that happening then. I'm no economist, so take that with a grain of salt. But, the thing is, with all of this noise, right, what happens? We get the noise, we get the news, we get the noise, and what happens? Pump, dump, right back to where we started. So you can trade this news, and you can anticipate it with fairly decent accuracy if you want to get involved in all that. You just need to know when to get out, right? Those are kind of trade the moment, if you will. But if you pay attention to the technicals and you use tools like I'm sharing with you today, then you can ignore that, and the chart is not going to lie to you because it is what it is. So we're still in this, in my point of view, we're still in a bull market. The trend is still intact, and until we see a breakdown that could potentially take us past this 2021 top. I mean, to be perfectly honest, this pump right here, is it a coincidence that is from November 5th, election day? This, my friends, is the Trump pump. And so we could conceivably see this, I'd love to see the trend line hold. I do feel that that's the strongest place on the chart and the most bullish case scenario. But this market is shaking people out as hard and fast as it can. And so we could see this get overshot. We could see it go to this 75, 76K level where, when we were making this move up here, for anybody that was with me back then, I kept saying, we got to find spots for consolidation. We have to find some consolidation zones. Otherwise, when price comes back down, and it will come back down, otherwise, when price comes back down, we're not going to have any friction. There's no place for price to land on support. And so this year, this was actually stronger than this, but this was thin, right? Where all the strength came from was this breakout level. 91, what was this? 91.5, 91.6-ish, right? So this was tested time and time again. We thought it was a validated RS flip, and we broke down through it. What has not been validated as an RS flip ever has been the 100K level. And if we go to the weekly chart, you're going to notice that we actually do not have a single weekly candle that lived its life above that 100K level without a wick below. And so, in my opinion, what needs to happen is price needs to find its footing, whether that's here at the trend line, whether we overshoot it and go into this 75, 76K level, which now has some beautiful confluence with the 50-week moving average, which, as you can see here, was a good touch point back in August. I could see that happening. Or we could conceivably overshoot it even more and take it all the way back, completely retrace this silly Trump pump and get back to the trajectory that Bitcoin was on all along. And so if that happens, I would be prepared. Number one, I would have some powder for the potential of this happening. Have some dry powder for that. Number two, figure out what you want to do with positions that you're in now, right? If your dollar cost average down and you're in a great spot below that, excuse me, you may not want to sell. Likewise, or to the contrary, I should say, if you're already underwater and you don't want to drown, you might consider cutting your losses and go for a better entry when all of this volatility settles down, or we validate bottom support. So, and in terms of what kind of a retracement that would be, this would, I've said for years, 20 to 40% corrections happen in bull markets with regularity. And we're just finally getting something to that level, right? This was a 28% correction. If we take it all the way to the trend line, we're closer to 30%. If we went to that 76K level, we're at 30%. Okay. If we if we flush it all the way down to that 2021 top at 69K, which in my opinion is really the last great and strongest, most valid RS flip on the chart. So much confluence and so much time below this level. This is still within that 40% range. And one more thing I would show you that I watch closely is the RSI on the weekly. And I think I have that open someplace. Let me see if I can find it. Here, let me open up the right asset for this and look at this on the Bitcoin chart. Yeah, Cardano, these other coins that were touted in the new in the upcoming crypto reserve, I don't know. I don't think he's done a lot of homework. In fact, I've said all along he has no idea what this asset class is all about, and so that's going to be what it's going to be. Unfortunately, is what it is. But this other thing that I watch here is the RSI on the weekly. And if you notice, in this 41, 42 range, look at how this is formed, really marked bull and bear markets, right? So this is the RS flip line on the RSI, as far as I'm concerned, for Bitcoin on the weekly. And you can see how we just had a touch here, bottomed out this consolidation, right? This was a mid-cycle top, and then boom. So we could be in a similar situation here, right? This looks an awful lot like this, right? We could be in that mid-cycle top situation right here, where we get this last flush, and then we're right back in it. And so keep an eye on this RSI, and if you see price push below, that could be a sign that that we're on the way to paradise. But a rejection from here and a rebound from here, which they tend to be, not always, but they do tend to be V's when we bounce from that. That could be a tremendous entry. Now, if price breaks down from here, I wouldn't buy on the breakdown. I would buy on the breakout back above. Simple as that. So put that in your little in the back of your mind, in your little toolbox, for sure, because it's a strategy that works. Back to the MTF grid, you can see price is pushing up, and we're on this, now wedged between these two large liquidity blocks. We got 24 million now. on the bid side, and looks like we had a little spike in here, and that's still 23 million on the ask side. So will this get taken out? Well, notice what's happening here. We're starting to see some selling. So maybe that's the game. Maybe it's maybe this is a sell the rip scenario, and when price comes back down here, guess what's happening? Guess what's going to happen? This is going to do one of two things. It's going to move up to push price up through this, or it's going to rug pull, and we're going to go back down and test again. Mark my words. Now that I say mark my words, it won't happen. But that's historically what has been happening. So with that, I'm going to wrap it here, guys. Definitely an interesting day of price action. This may be a sell the rip. This may be a buy the dip, sell the rip environment until things settle down. Or you can take the approach of sitting on your hands until this settles down. That's also a great way to mitigate risk. Sitting on your hands is a strategy. Out is a position. Keep those things in mind as well. Hope this helps you make some better trading decisions. Again, if you want more info on it, you'll find links in the description, especially on the YouTube channel. And you can always go to materialindicators.com. And if you haven't done so yet, I can't impress on you enough. Join us in the Telegram community. It is epic. Really, really a great group, a global group of traders. I invite you to join us. You'll find the link to that also in the description down below, and also on the Material Indicators X page. Have a good one, guys. We'll do it again. Mañana.